Hi, this is the FixProfit channel. Now I will show you how with the help of the most powerful bot I will earn a good amount of money, starting with just $1. I will enter each trade for the full amount of the deposit, and after the end of the work I will announce the results to you, friends. Let's go. Active sold. This is the first signal from the reactive neural network. I enter the market clearly according to the recommendations from this robot. I started on the dollar-yen currency pair. Time frame 1 minute. I accelerated the price movement to save your time. And now I want to tell you about an important thing. The bot is free. You can get it from the link in the description. In a month it will be possible to pick it up only for a fee. Hurry up. And in order not to miss new interesting content, click on subscribe to the channel and on the bell. Give us a like and comment. Our team really appreciates your feedback. There are also some nice bonuses waiting for you at the link in the description. Together with the free bot you will get access to VIP chat with analytics and a promo code for plus 100% to the deposit. That is, for example, if you deposit $50 you will get $50 bonus on top of that. Promo code works on the first deposit. Ethical dilemmas in the age of automated trading, the hidden side of high-speed profit. Let's talk about it, folks. Before we dive into the deep waters of automation, ethics, and AI-driven decision-making, let's address the very human part of trading. The part where you protect your capital, your mindset, and your future. The rule is simple. Never risk more than 1 to 2% of your deposit on a single trade. This isn't a suggestion, it's your shield, your foundation, your parachute. If your deposit is $100, your trades should be $1. Your profit per deal? About 80 cents. If your deposit is $1,000, you trade $10 per deal. Now you're earning $8 on every win. And with a $10,000 deposit, your trade amount becomes $100, making $80 per win, without increasing your risk percentage. That's how real traders scale. Not by gambling harder, but by compounding smarter. So, if you want bigger results, fund your account with intent. Don't just dip your toes in. Step in like someone who's here to build something real. Let's be real. We're no longer in the era of just clicking buttons and reading charts with coffee in hand. We've entered the Iron Man phase of trading. You've got algorithms executing trades faster than human reflexes. Bots scanning news in milliseconds. Platforms running simulations thousands of times before you even finish breakfast. And while it sounds powerful, and it is, there's another side to this supercharged future. Just like in Avengers: Age of Ultron, when Tony Stark created an AI to protect the world. Only to realize he'd built something he couldn't fully control. Automation in trading raises questions we're not fully prepared for. Questions about transparency, responsibility, fairness, manipulation. This is where ethics crashes into efficiency, and the collision is getting louder. Guys, the bot has already given me some accurate signals and I continue to move quickly to the top. This is a tool with which you will start earning quickly. The return rate of its signals is 80% on average. Look at the channel with reviews, how much people earn, the link in the description. Friends, take part in our big contest with a prize of $1,000 for one random comment. The terms are simple. Watch this video in its entirety, put a like, subscribe to the channel and write one comment on the topic of trading under this video. I will choose 2 winners using randomizer and publish the results in my Telegram channel, where our team also shares knowledge about trading and helps traders to learn. The link is in the description. Subscribe. The contest is held every week. By the way, the periodicity of data update in the robot is 1 minute. This is convenient, because on longer timeframes you can check the updated information and detailed report on indicators from the bot right during trading. Let's unpack some of the biggest ethical concerns brewing behind the scenes of auto trading, especially when it comes to platforms working with currency pairs. Who's responsible when an algorithm goes rogue? Imagine a scenario where a trader builds a bot that scalps micro volatility during low liquidity hours, causing slippage or mispricing across pairs. It technically obeys the rules, but ethically, it's disrupting fair execution for others. Who's to blame? The coder? The trader? The platform? This is the Jurassic Park problem. Your scientists were so preoccupied with whether they could, they didn't stop to think if they should. Do automated systems exploit retail traders? Some high-frequency bots are designed to react before humans can even blink, front-running news releases or quote changes. If you're a manual trader with a solid strategy, you may still lose simply because someone's bot beat you to the price by milliseconds. It's like trying to run a race, and your opponent has a motorcycle. Is that really fair? Transparency versus manipulation. In many cases, traders don't fully understand what their bots are doing once deployed. Especially with AI models trained on past data, they might learn unethical behaviors if it leads to higher returns. Think of Facebook's old algorithm that favored outrage because it drove more engagement. It worked, but it created chaos. What happens when a trading bot learns to manipulate order flow or exploit temporary broker inefficiencies? Is profit still ethical if it's built on invisible manipulation? You ever seen Westworld? It's a futuristic theme park where AI hosts start evolving beyond their code. At first, everything looks amazing, but as they gain awareness, the lines between programmed behavior and free will blur. In trading, we're seeing the same arc. At first, automation was just about speed and convenience. But now, it's about decision-making. Bots aren't just executing, they're choosing, optimizing, adapting, and that opens the door to unintended consequences. Real-life stories. When tech crosses the line. In 2012, Knight Capital lost $440 million in 45 minutes due to a rogue algorithm deploying faulty code. In the flash crash of 2010, one trading bot helped trigger a chain reaction that erased nearly $1 trillion from US markets in minutes before rebounding. Some brokers have been accused of using bots that shadow retail strategies, entering on opposite sides to collect fees or push prices against less experienced traders. The deeper we automate, the more these stories shift from anomalies to accepted risk. But should they be? So what can you do? Especially if you're trading on platforms that support automation and high-frequency decisions. Build with intention. If you're using bots or scripts, know exactly what they do and why. Stay transparent. Whether you're coding your own logic or using third-party tools, document your strategies and results. Own your decisions. Avoid exploitative tactics. If your automation relies on latency arbitrage, quote manipulation, or targeting inefficiencies at the expense of others, rethink it. A short-term win isn't worth long-term consequences. Respect the platform, respect the market. The integrity of trading comes from mutual respect, between traders, between trader and platform, and between trader and the rules. Automation is a tool, not a license to bend the system. Imagine trader profiles that rate automation strategies not just by ROI, but by impact. That's where we're heading, because eventually, ethics will be the new edge. So, in the meantime, I've completed my work. I completed it successfully, because I worked exactly according to the robot's signals. I was attentive and engaged. From $1 I was able to earn $1,000. Get the bot from the link in the description, friends. Subscribe and click on the bell. I'll be back soon.